Happy to be able to provide some information this morning on ATHA Energy. As I will be making some forward-looking statements, natural disclosure, it's available on our website if you'd like to review it in detail. ATHA Energy, we're a relatively new company. We came to market in 2023, have substantially grown since that point in time. We have a very strong, clear, and direct aggressive growth strategy that is aligned with the macro sentiment that we see in the uranium space currently. Over the last year, we've grown from a company that had 3.5 million acres of exploration property in the Athabasca Basin to one that now holds over 8.5 million acres of exploration property across Canada's best uranium jurisdictions, predominantly in the Athabasca, as well as the Thelon Basin and the Central Mineral Belt in Labrador. In addition to that, we have a more mature project, which is our Angilak project, 43 million pounds at 0.69% U3O8, and recent discovery, the Gemini project on the eastern edge of the Athabasca Basin. We're backed by a team, capital markets team, that has demonstrated strength in the space. Start of the year, we had about $60 million on the balance sheet on a pro forma basis. We're executing a $30 million exploration program this year, maturing our range of assets. Over the course of the last year, we've grown and matured as an organization as well, and established a very strong team of uranium people that have had multiple years, decades in the industry, across some of the industry leaders, that being Orano, Cameco, NextGen, etc. From our cap structure, I'll just put a few highlights here. We've raised about $55 million into the deal as ATHA alone. The vast majority of that has been at $1. We entered into a three-way transaction last year in which we acquired 92 Energy and Latitude Uranium. Both of those acquisitions were done at $1 price for ATHA. We're strongly held by founders and insiders, about 24%. Institutionally, we're at about 27%. Where are we at? I mentioned we're across the Athabasca Basin, the Thelon Basin, the Central Mineral Belt in Labrador. If you're close to the uranium space, a little introduction is needed for most of those jurisdictions, particularly the Athabasca Basin. Getting onto, I mentioned the scope and scale of the work that we're doing. That's obviously not possible without an experienced group of people that have been pulled together here. Myself, I'm a technical guy. Came up through Cameco, NextGen. Our Vice President of Exploration, Cliff Revering, joined us in February of this year. He's a guy I consider one of the best uranium people in the business. He came up through Cameco Orano. He's a chief geologist at Cigar Lake when Cameco brought Cigar Lake into production. He's supported by a technical team with a depth of experience, which has us in well positioned to be able to execute on our aggressive growth strategy and plans. Maybe just jump into how our pipeline of projects look, starting off with the more established project, the resource base coming out of Angilak. The Angilak project, LAC 50 deposit, 43 million pounds, 0.69%. We're just coming off of a summer program there where we put 10,000 meters, 25 drill holes into it, all of them expansion focused, all of them with a strategy to build and expand the envelope of mineralization at that project, which was highly successful. We're currently have drills operating at our Gemini project, which is a recent discovery on the eastern edge of the Athabasca Basin. From there, and something that's, I would call it unique to ATHA's portfolio would be we have a 10% carried interest in a large percentage of NextGen Energy's exploration portfolio. That's a 10% carry rate through to a feasibility level study, at which point it becomes either participatory or converts to an NSR at our election. And then, going down from that, call it up the risk curve, down the maturity curve, but up the torque curve, you have a pipeline of around 8 million acres of exploration property across the largest uranium or best uranium jurisdictions in the world, for which we've been advancing significantly with some of the largest airborne programs ever executed within the uranium space. Now, what's the opportunity? The opportunity that we see, is driving through Angilak right now. We bought that project. We bought Latitude Uranium because of the upside that we saw in the Angilak asset. we made material steps this summer to realize that upside, and now that's projecting us. You go from 43 million pounds, you expand that resource, you look at development stage COs within the Canadian uranium industry, and that's a directionally where we believe Angilak is moving. ATHA, but from an overall perspective, we're looking at a diversified investment portfolio internally, and what I mean by that is that we're deploying $30 million into the ground this year. That's across a range of assets, ranging from our most mature, which is Angilak, down that up that risk curve into Gemini, which is an exploration post-discovery but exploration stage project, and then continuing to invest in a long tail, a long pipeline of exploration targets from there, building up a really large and robust pipeline of exploration targets within the Athabasca Basin. Now I'll just highlight, we don't have a lot of time here, so I'll just highlight a few key points from Angilak. Why we assessed it, why we liked it, why we acquired Latitude. 43 million pounds, 0.69% U3O8. Very good resource base. One of the highest grade deposits outside of the Athabasca Basin. When you look at that on a comp basis, I had the opportunity to act as a chief geologist at Eagle Point, which is one of Cameco's operating mines, for a number of years. The average grade at Eagle Point was 0.7. You're looking at Angilak, Lac 50 average grade of 0.69. We like that. We like that profile. That's about 16, Dave. That's about 16 pounds of uranium per ton. If you do the math, you wrap some modern pricing around that. We like the value. We like the value of the in ground. You wrap kind of modern mining practices around that. Say you take, for example, some of the work that was done at NextGen, price it, operating costs in that kind of $400 a ton directionally. So we really like the foundation of this asset. The critical path, though, goes through scale, and that's why we bought this project. This resource went from 14 million pounds to 27 million pounds to 43 million pounds year over year over year. It's still in the very steep part of that resource growth curve. And understanding when you assess this from a fundamental perspective, then understand that the critical path goes through scale. That's exactly what we designed for a program this year. Just over 10,000 meters went into it, 25 drill holes, all of which were mineralized, achieved their objective. What we did was widely spaced drilling. We expanded the footprint of mineralization within the Lac 50 deposit itself, but then in addition to that, identified a number of mineralized parallel corridors or parallel structural trends to the Lac 50 deposit itself. We've named those Lac 48, Lac 52, Lac 54, et cetera. And through the course of this summer, what we've been able to achieve, in our perspective, is materially de-risking the next stage of work at Angilak, which then goes through resource growth with the objective of reaching that tipping point that then tips the project over into a development stage co. And when you refer back to a few slides ago and look at the valuation of development stage co's with the uranium assets under development or advanced resource stages within the Canadian uranium market, that's a space that we want to continue to move towards. On average, those assets, those companies are generally valued at a range of, say, it changed by about 10% yesterday, which was a really good day in the uranium space, but went from, say, $5 to, say, $11 a pound enterprise value per pound. With the grade, with the profile that we see here, we have a view that we'll be able to continue to build resources for a significantly smaller margin than that, therefore representing an arbitrage in the market and an opportunity to advance this thing forward in a meaningful way. From there, Gemini. Gemini is a project that we acquired through the acquisition of 92 Energy. The reason we acquired 92 Energy was for this Gemini project. It's in a newly discovered fertile trend on the eastern edge of the Athabasca Basin. We currently have an active drill program going on here, which is advanced exploration that's focused on identifying additional mineralization along what we understand to be a fertile kind of structural corridor within the eastern edge of the Athabasca Basin. I mentioned just briefly ATHA's 10% carried interest. We have a 10% carried interest in a portion of NextGen's SW1, SW2, and SW3 exploration projects. we like it. It's an option. NextGen's obviously had a tremendous amount of success in the southwest Athabasca Basin. They're at the advanced stages of permitting, getting ready to make a final investment decision and execute a project that will have a world-leading, world-class operation in the southwest Athabasca Basin. In parallel to that, they're also exploring. That comes through success that they had on Patterson Corridor East, but also extends through SW1, SW2, and SW3. So it's an option in our portfolio that we like, and the opportunity to see that mature through the work that they're doing is something that we like as a carrier, a free option. Now, getting to the projects across the Athabasca Basin, we're in a fortunate position of having a significant land position in what we consider the best uranium jurisdiction in the world. Over the last 14 months, we've covered off, we've completed around 3.5 million acres of exploration work with airborne geophysics. The whole idea there and the concept there is ATHA is not a land bank. We're active explorers. We want to acquire data, modern data, to be able to assess the prospectivity of these land packages, be able to rank, order, and prioritize, and choose our path forward internally on those areas which we're going to continue to advance and explore ourselves. Any of the projects that fall outside of a 2 to 3 year exploration window for ourselves, we've had the opportunity to start to invite partners in, pull some of that value forward, therefore maximizing exposure to discovery within this portfolio of ground within the Athabasca Basin. We also hold a significant land position in the Thelon Basin, which is just north of our Angilak project. The most notable project in the area, for now, Rebecca, the most notable project in the area is Kigavik. Just on trend of that is the work that Forum's doing on their project on a fertile trend. This is a part of the world that we really like. It's a Paleoprozoic basin similar to the Athabasca Basin. The difference is it's seen a fraction of the exploration work, and we really like the metal endowment and the potential metal endowment that we see here, and have taken steps to continue to mature this exploration package as well. A built-in kind of catalyst in this area would be Orano's Kigavik deposit. Kigavik is, on the books, say around 126 million pounds. Orano had advanced it through to a feasibility stage in the last cycle through advanced permitting process, and then with Fukushima kind of backed away from a final investment decision. Given the issues that you see in advancing projects within their production portfolio, i.e., Mongolia, Uzbekistan, Kazakhstan, Niger, we believe that this is a very strong asset for them and one that will get attention moving forward, which then, in our view, becomes a natural catalyst for additional work, activity, exploration, expenditure within the Thelon Basin. We also have the Central Mineral Belt CMB project in Labrador. Historic resources of about 14.5 million pounds across a couple deposits. Very compelling, interesting part of the world in terms of the geology there. It's basically at the intersection between the Superior, the Grenville, and the Nain Pluton, which makes it very compelling from a large-scale, regional-scale exploration perspective. And what we're unpicking here is a multi-commodity potential. It looks more like an IOCG-type target system as opposed to a conventional uranium basin-type play that we'd be used to thinking about within the Athabasca and or the Thelon. The interesting part here is that it's directly adjacent and on strike of Michelin, the Michelin project, which is Paladin's. That has become much more interesting recently with Paladin entering into the Canadian uranium landscape through the acquisition that is very close to being complete now, we hope, of Fission. In doing so, they've indicated they intend to return back to Michelin, which again, from our perspective, then is a natural catalyst to be able to pick up and execute work on the ground here. We've been doing a significant amount of desktop work, target generation work, etc., and this project's ready to go. So I'll just maybe bring it full circle. ATHA platform came in 2023 to market. 3.5 million acres of exploration property with a strong balance sheet. Over the course of a year have materially grown our portfolio and transitioned our our portfolio of projects through both internal growth and acquisition. We continue to have that mandate. We'll continue to invest heavily in our projects that we have on the books right now and continue to aggressively grow on the left side of this commodity cycle. It's one that we have a very high conviction is a generational opportunity in the uranium space, and we look to continue to be, be aggressive with our growth portfolio. But obviously measuring risk at the same time. Thank you.
Thank you very much, Troy. Time for questions. Troy, Angilak is 43 million pounds right now. Grades 0.7%. That's the second highest grade outside of the Athabasca Basin in Canada. Given your experience in the Athabasca, how are you approaching exploration at Angilak?
Yeah, well, I'll just give a very, very practical example. We're very realistic, Dave. We can run a DCF on a project. We understand that there's a threshold that a remote project in none of it needs to reach. And so that's why we took the strategy and approach that we took this year with widely spaced step-out drilling, expanding that envelope of mineralization, which then in turn is de-risking the next phase of growth, which is resource growth. The other opportunity or option would have been incremental resource growth, say go from 43 to 55 million pounds. 55 million pounds in that setting likely is not reaching that threshold to kick it over into development. So what we did with our targeting and with our program was essentially target seeking. Okay, target that envelope of rock that has the ability to host the amount of resources that's required to kick it over. And then from there, it de-risks that next phase. Next phase is resource growth to get us there. But from a technical perspective, it's a one-off uranium deposit, sure, but there's also similarities. What we're seeing is it's hosted in these tophaceous horizons that are structurally disrupted, actually in an extensional orientation relative to the snowbird. And so it's really getting a handle on the structural controls, the first and second order structural controls, and the controls on mineralization, which then in turn helps us be more predictive in our drilling, which is beneficial.
This was thought to be a Beaver Lodge type deposit. You think it's more like a basement hosted Athabasca type?
Yeah, I do. I do. I think it's looking at the core, looking at the geometry, the geology, it's a structurally controlled basement hosted uranium deposit. And one of the interesting opportunities is that Lac 50 is right at the edge of a basin. The exploration to the south and west undercover has never been done. And so, we have mineralization, as you're likely aware, at a target called Dipole, which is on the north and west edge of that basin. We also have mineralization in a target called 9 Iron, which is on the south and east edge of that basin. We have mineralization, 43 million pounds of resources on the north and east edge, which is Lac 50, and the basin itself has never been explored. So in order to do that, we've just completed an MMT survey, mobile magnetotelluric survey, EM work, looking at unpicking the targets under that basin.
Okay. Questions?
Hey, Troy. Looking at your projects today, you've got an incredible land package in the Athabasca. You've got a big Angilak in Nunavut. You've got Labrador. How do you ascribe value given fixed $83 U3O8 pricing and set today's rates? How do you ascribe value in your own company between these different projects?
Yeah, I think what we look at is, right now, call it value or look at it from the inverse context of how we're investing in our projects. And so if you take the inverse, we're investing most heavily within our most mature projects. And it's that balance between higher probability, higher certainty work, and being able to advance foundational projects between, and then the balance though within the portfolio comes with that long tail of exploration targets that we're all, or in projects that we're also investing in. And the reason for that is, hey, exploration, greenfields exploration in particular, is higher risk, but the trade-off with higher risk comes higher torque, right? And so it's striking that balance and a mixed balance within our investment portfolio internally between advancing our more mature projects and still providing that torque in the portfolio through greenfields exploration and discovery potential.